Looking forward to meeting you, my trading warrior brother. I'm going to pass you the controls and make you the presenter so we could hear your voice and see your screen. Maybe you're going to want to show your website, etc. Welcome to F.A.C.E, Jamie Marx.
Good morning.
Nice to meet you, Jamie. How are you?
Likewise. I'm well.
Good.
Well rested, well fed. This morning.
Are you here in the U.S.?
No, I am not in the U.S. today.
Oh, okay. All right. So, huh?
Go ahead. We're based in Miami, Florida, however.
Oh, okay. All right. So, where are you in like a Caribbean tax haven right now?
Cayman Islands.
All right. Yeah, that's one of them. All right. So great to meet you. You're living my dream. So tell me, before you ended up being able to trade from the Caymans in Miami, how you got into the business in the first place. How did it happen for you, Jamie?
Well, my dad was a stockbroker, so I was exposed to the industry for some time. I actually got hooked mostly on the commodity side first. You know, you kind of rebel against your dad in certain ways, but I would walk into his office, and there was finally one guy who finally came to the office. He was hired, and he set up this outrageous presentation. He had so many screens. He was barking out signals. He had assistants. And he was getting all the glory, and he only had like 10 clients. And my dad said, he's a commodity guy. He's the only one here that has a license. I said, I want to be that guy. And that kind of got me hooked on the commodity side. So I received the Series 3 first before the Series 7.
Okay.
And the industry has grown exponentially since the early 80s when I first entered the business and watched the growth in the managed account futures industry.
Okay.
But by primarily trading precious metals, energy futures, stock indices, the financials, very little in the ag, very little in the livestock area as far as futures. But that was really my first inkling into the business. Always liked the futures side of it, and based in Miami, we were able to come across a lot of South American producers of coffee, some sugar, and used coffee. You know, became hedgers.
So you're handling hedging accounts. You're hedging.
Yes,
for
we
people?
were at the beginning. Yes, and then when I got really involved in the energy side, we were hedging gasoline futures for Alamo Rent-A-Car, Hertz, and so forth. And this really started me modeling technical analysis and modeling algorithmic trading models for these various liquid markets. That's really the start of the whole thing.
All right, so you use algos. You're kind of on your autopilot. It's non-discretionary, right?
That's correct.
Non-prop.
We think it has to be this way in the speed in technology in today's society. It's just so fast. You can't do this manually. It's just hard.
You know, I'm interested. Do you have to spend a lot of money to come up with a good algo, or how do you go about it? Do you need to have coders, you know, as full-time employees, always trying to fine-tune things to put on automatic pilot? And my follow-up question would be, most of us were, you know, kind of like prop discretionary traders. How did you learn? And the biggest hurdle is letting go and letting a robot, EA, or something else take over. How were you able to do that? I still can't.
Absolutely. Well, first and foremost, it's the emotional magnet. And you know, being great creatures of habit, we hardly want to delve into something new, even in the trading platform. It's just something we don't like to deviate from. But I noticed that on good days, and I consider myself a good trader, so I can't even imagine a bad trader. But on the good days, I would say, okay, the gold, it's had a good day. You know, $8, $9 is a pretty good day in gold.
Right.
But the algorithm would not see that, and the algorithm would say $14, $16, and I'd be scalping, and I'd be out with $8, $9, and I would see this
to me all the time.
All the time. So then you're saying, okay, so you know what? There has to be a mechanism that takes everything you want to do and incorporates it into rules and rule-based trading, and it just just cold, and it just triggers and pulls these triggers. When you have a system that is okay, you don't really see it. But when you have something that's very good, you really see it. You see it quickly. So what you need is just a lot more samples or repetitions of the move, and then you can start quantifying, and you can start honing in on what's really working for you. What works for many people works. What should I say differently? Some things we look through different eyes. I look through a different lens than most traders and advisors and brokers and investors. Most people are focused on price level. So if it's crude oil trading out $51, it's a huge move today. It's 6% move. That's just unheard of in commodities. It's big, huge moves. This a 2%, 3% move in a leveraged product like crude oil or gold is a huge move. So to say 6% is an understatement. Yeah, it is
Especially after so big of a move that the price is cheaper and they still get these magnitude moves.
Yes.
That's the amazing.
Those are echoes. So anyway, we're all focused on price. $51 a barrel, $1,200 an ounce, $4,500 in Bitcoin. It's price, and most people, investors, traders, that's what they're focused on, price. From once in a while, you'll see a model that has some volume studies, and they'll use volume and a little price, but very few or hardly anybody focuses on the time element. Hence the name clockwork. And when we come in, we look at the market in two dimensions, not only price, but we put a little emphasis on the time. And when we get price and squared with time, you see the market and it jumps at you, and the signals are clearer and stronger, and it keeps you out of a lot of false trades.
Sounds like you automated some GAN stuff, Jamie.
I automated some GAN stuff along with some seasonal studies. Everything has a seasonal cycle. It's more prevalent in commodities. You can see it in gasoline, the summer demand starting in late Memorial Day, late May, and into Labor Day, September, because that's the pattern in the United States. Gasoline is the carbon we use, and it's going to be for a while. So anyway, we see that there is a repetitive market cycle that pretty much every year we see the same things in some of these same markets, and now we have computers to be able to go and test a lot of markets. And a lot of years back, which we couldn't do that in as little as 5-6 years ago. So that being said, we're now looking at the market in a time analysis or an axis, and we see that these markets move in certain dates. So let's just say that we have portfolios now created around this time analysis and algorithm that we've created, and it seems to be working pretty well for us. As long as we have this 12 months and 30 days in calendar, we're going to do okay, we think. So we've been able to have our software top rated by the Futures Truth magazine, and been there for now 4 years consecutive, back to back. And we think it's because of the formula that we look at the time element. So
what kind of trading do you do with this algo? Day trade, swing, position?
All of it. We have algorithms that trade short-term day trades, mean reversion that are always in the market, that's always in some type of trade during the day. But most of the money around here is divided mostly in 67-33 split, where 67 is a longer term or intermediate term trading, and only 33% is day trade, 1 day trade scenarios.
Okay, what instruments do you position trade? Is it FX? Is it commodities? Is it equities? Or is it everything?
Well, it's everything. Mostly it's futures, Forex. I am into the crypto, but only Bitcoin. A lot of the ETFs like the GLD and the SPY, OIL. But anything that has liquidity and volatility is a good candidate for the algorithms that we employ and the time mechanisms. So
let me ask you this. It's been a rough and tumble year in a lot of different asset classes. We're approaching December now. Do your algos give you any kind of outlooks as to what they're looking for going into 2019 that could set up to be terrific position trades?
I'm sorry, I lost you as I was
Okay, I was
moving through the
wondering,
screen.
since you use these algos for long-term position trades and we're near the end of the year, if your algos are, spitting out anything that looks like they could be terrific position trades going into
Sure.
2019.
Sure. Well, let's take it step by step because I move week by week. I have a calendar. I have my own calendar, let's say, and I can kind of look on the horizon, see what's coming up as far as trades. So let's look at something like the S&P or let me go to the Nasdaq. Here we're going into a Nasdaq model that has given us a buy signal, and this buy signal based on time will probably carry us on to or about the 6th 7th of January, of December. So it's not a long-term trade, but the bias of the window is more important. So
I see.
I want to say
Okay.
that we have a short-term bias that between, let's just say today, or yesterday, long the S&P, long the Nasdaq, long the Dow Jones, and pretty much going to be holding that position into about the first week in December. We feel we have a tendency to move up and pretty strong in that little window. Now,
Well,
between the 7th and the 20th, we'll probably cool off a little and then back it hard that 20th into Christmas. This seems to be the pattern, has seemed to be the pattern over many, many, many years. Whether it holds this year, we think it will, but not etched in stone.
okay. So what's your business model at the Clockwork Group?
The business model, originally it was to market high-end algorithms, trading algorithms to other seed commodity trading advisors and other investment advisors that would look to supplement their current trading style. Because the style is based on time, it could complement, let's just say, an investment manager who has systems or methodologies that he's net long, let's just say S&P, and we're showing them a window where you should be short. Something like that is what we've been doing. However, recently, and we've been able to catch some very nice technical moves in the Bitcoin arena, and it's shifted us our business model to be moving into Bitcoin futures that are now or have been trading for the last year on the Chicago Mercantile Exchange and the Chicago Board of Trade, being one of the first Bitcoin trading advisors, registered commodity futures trading commission, and the National Futures Association as a commodity pool operator, commodity trading advisor. So we think that we're going to attract like qualified eligible participant QEP type accounts in this new space, only space that let's just say that it's been given some regulators and some framework that we were lacking in Bitcoin in the last 10 years. And now it finally has a vision of a real product. The Nasdaq is also bringing on a Bitcoin product. There's a Bitcoin ETF that was approved in Switzerland yesterday. So we think we're making some more inroads as far as the stability of Bitcoin. What I like and what I see from a business standpoint is, hey, there's over $360 billion in the managed futures arena. Very few of of that money, percentage of that money, is in the Bitcoin space right now. They're testing the waters. So the big groups like California Teachers or IBM or a corporate treasurer at Microsoft that wants to test the water, he's given the authority already to trade Bitcoin. He's not going to wire transfer over to Bitstamp or Kraken or Polynex, one of these lower platforms or lesser known exchanges. He's going to go to the CME or the CBOT, which is the world's largest derivatives exchange. It's been around since the 1800s, have the regulatory framework in place. So we think that this space, most people are net long Bitcoin, and there's no bona fide hedging vehicle. So this is what we're attempting to do, is to bring a real hedging vehicle, trading the futures product as a vehicle to hedge the individual who's net long Bitcoin cash.
Okay. You have any view on Bitcoin near 4,000?
Yes, I am probing this area right in here. We actually got very aggressively on the short side when it broke 61.40, which was our previous support level. We had a target down at 4,500. We got to 4,500. We went below 4,500. I'm watching it now. There's no buy, like a technical buy that I would see on my charts, like if I put up a
Right.
BTC USD, it's not a technical buy. It could be a risk reward scenario where, yeah, from that standpoint, it looks attractive. Somewhere here, 42, 4,300 for a move to 7,800, 8,200 with very little risk on the downside. This is more in line with what I think we're going to see in
Okay.
Bitcoin. So I think the timing bodes well. Let me see here. See, we've been in Bitcoin. Let me see. I don't know if you can see this. Um, we've been in a Bitcoin sell. This has been sell here as well. None of this is going to give me a short-term buy anytime soon. However, what I am going to see is I am going to see a risk-reward setup, or I'd like to see a 3-to-1, 4-to-1 if that's established. And I think it's very, very close where I can see, okay, stops would have to be below 38.50. The closer we get to 4,000 would be the trigger point. Probably 4,100, 4,190, what we were looking at last time. Somewhere down in here, I'm going to take the risk to the upside.
Okay, Jamie, any way a retail trader could follow your work, and would it be beneficial for a retail trader to have your input from your algos?
We are generating a platform in the near future, probably the next 45 days, where we're going to have several algorithms almost on a many driven, or they're going to be able to select the asset class and mix and match, almost like a portfolio manager looking to create his own mini hedge fund. So we have 5 sectors that we look at: agriculture, the currencies, energy, the financial indices, and an interest rate instrument. And we think that we attack one from each group. So for instance, in the precious metals, we look at platinum. In the stock indices would be the S&P. In the agriculture area, what they would say would be coffee. In the currency, we're looking at the British pound. And what am I missing? The energy is Kelly B, which is the top-rated system for gasoline futures. So we have that 5, and we put those 5 systems together. The equity curve is through the roof, and the drawdowns are greatly minimized. So
all right, what is your max? I'm glad you brought it up, because when I used to raise money for CTAs, everyone looks at the period of greatest returns. I'd like to know what's the period of greatest drawdowns for you.
The drawdowns have been limited to approximately 14 to 19%.
That's pretty good.
Yeah, and the upside has been just huge. So this is what we've been priding ourselves on, is that we know we have one of the lowest drawdowns in the industry as far as systems. With the same on the upside, it's a huge number. So we have portfolio that will show something like 1.1 million versus negative 19,000, and those are risk reward ratios you can definitely deal with, but only when you have the discipline to follow a system. And I think that more and more banks, insurance companies, pensions, and thrift institutions are replacing bodies with algorithms for many reasons, but mostly it's a cost-effective, and it has performance reports of some of these individuals that are younger and have not seen the boom and bust cycles. So I think this is the way we're going, and hopefully we'll continue to be leading force.
Well, Jamie, it was really interesting talking to you about automated trading, and I could tell you come from the other side, so you're a convert, and that tells me something. I'm hearing more and more of these stories, so you're right. It is a trend, and you don't have to have $1 million to set up banks of computers like people visualize. I forget where they keep them all in Manhattan or or in New Jersey, where all these, you
Low
know,
latency, yes, correct.
high frequency traders spend a lot of money to be able to, you know, pick up, you know, fractions or decimal points in the market. You're saying you could do it without that type of investment, correct?
Correct. Yes, it's
Okay.
changing. Listen, when you and I first got in the industry, a cold trek was a very, very expensive instrument. It gave you all you want to
Yeah.
know. Okay,
And
and
yeah.
these and we used to share a Coltron between four guys on a swivel, and it was only
Yeah.
three lines, and it was no color, there was no graphics. There was nothing like you have now, and some of this stuff is available free. You can get a Ninja Trader platform for free, and it has every bell and whistle you could probably want. So the technology is definitely
My
made
God.
a
Yeah, you
lot
bring me,
easier
you
to
go
get.
all the way back to how about the phone that weighed about 25 pounds that you
Yeah,
put up to
the
your
brick,
ear? Remember
the
that
brick.
phone?
Oh
Motorola or
yes,
whatever? Yeah, the
it
brick.
was a Motorola. Good memory. Yeah.
Okay, well, listen, Jamie, really, I had a good time talking to you. It's edifying. And I think that even if you're a discretionary trader, you could add elements to it and maybe go through a process without just, you
Listen,
know,
we
going from
we
one.
all have access to the same data, and it's public domain. It's it's
Right.
it's open. It's a high. It's a low. It's a close. It's a volume. It's
Yeah.
open interest. It's applicable. It's how we massage this data to arrive at a valid buy or sell point. So this is the art, and we have a lot of guys in some beautiful suites in Boston. A staff and 25 guys doing algos research, and we have another guy working out of his garage in West Texas, and he's coming up with similar buy signals that the huge group is. How? We don't know, but we know that the computer has made it all possible, and
It
it's just
leveled the playing
fact.
field.
Yes, it
Yeah.
did.
Yeah. The great equalizer. You know, the Unabomber talked about that. Just kidding. But I'd like to wish you and your family a great
Thank
holiday
you.
season. Jamie,
Likewise, Bill.
I hope Pips rain down on you and really sounds like you're set up for the future, whatever that may be. And
Thank you.
congratulations on that. Keep
Thank
in
you so
touch with
much.
me. Like
Will
it or
do.
not, you're my newest trading warrior brother. Jamie
Okay.
Marks, everybody. Check him out on Twitter at the Clockwork Group, and your website is also named clockworkgroup.com.
Clockworkgroup.net and .co, and it's at Clockwork Alerts on Twitter.
Okay, got you, buddy. Thank you
Okay.
so much for your time
Have a
today,
great day.
Jamie.
Enjoy
All
your
right, good,
holidays. Be well. Bye bye.
good hunting. All right, that's it. I'll see everyone Monday. Good hunting. Remember, don't just count your pips, count your blessings. See everyone on Monday. Good hunting, and remember, don't just count your pips, count your blessings. You're welcome, Marius and Joshua, and see everyone Monday. Adios.